Hi everyone and welcome back. Everything looks normal, doesn't it? Until it doesn't. Look, in spite of everything that's happening day in and day out, the wheels keep turning. We go to work, we have our families, we've got our lives, we're busy, we're all very busy. The news every day just keeps rolling in and everything looks pretty normal. Economists don't seem like they're too concerned. The Reserve Bank's a little bit cautious at the moment, but they're certainly not panicking by any stretch of the imagination. There's no real panic visible in any of the media. The usual suspects are still screaming that house prices are going to crash. They've been doing that for a long time. There's a lot of noise out there, but no one really seems to know what's really going on. And if they do, the question then becomes, what do they do about any of it? But just have a look around. We've got a government which is literally spiralling out of control. We've got interest rates which are remaining high. Inflation is not slowing down. National debt is tearing past $1 trillion. Look, you've heard all of this before. And might I say, Victoria, a state that somehow managed to rack up $193 billion in debt. Did you know that in 2019, just 6 years ago, Victoria's debt was around $30 billion? $30 billion. Today, depending on which sets of figures you actually look at, our debt's close to $200 billion. That's a 600% increase in about 5 or 6 years. Now, to put that into perspective, the Victorian population grew about maybe 7-8% in the same period. So nothing about this is normal. It's not sustainable and it's not manageable. No economist on earth can justify this without laughing or crying, but somehow it's all good. Nothing to see here, just move on. And I really don't want to be the one who is negative, I really don't. But the truth isn't always very pretty. And that's just a reality. So the question becomes, what do we want to do? Just ignore it? Pay for it later? And look, I don't think that it's wise for any of us to just ignore all of this and pretend it's not real. Do we just trust the experts? And if we do, how's that worked out for us in the past? See, it's not just Victoria with the debt problem. There's multiple states now that are borrowing just so that they can pay interest. Interest payments are now one of the largest line items in state budgets, but the Australian Institute here doesn't know what all the fuss is about. It says much ado about nothing, in this article? In any case, the Reserve Bank says that it's expecting persistent inflation, to state the obvious. AICM here is showing record credit stress levels. Recent data shows that Australia's saving ratio is near historic lows. Households are saving very little, if anything. 1 in 4 households are under mortgage stress. Many people are using credit cards just to survive. Credit cards, that's over 20% interest. There's rising arrears on loan payments, and regulators are saying that only about 1% of mortgage loans are impaired or defaulted at this stage. It's not too bad. So while petrol for the debt engine's still flowing, there are very clear weak points. Rising arrears among over-leveraged borrowers, increased interest rates, just general economic pressure. People are cutting back on essentials just so that they can survive. So people are struggling, no doubt. But don't forget, we've also had a very big wealth boom in the last 25 years. In spite of all this doom and gloom, according to a recent report, Australia now has about 760,000 high net worth individuals. They're controlling about $4 trillion in investable assets. As of 2025, around 1.9 million Australians qualify as millionaires in US dollar terms. Now that's largely driven by property market gains. Recent statistics show that household wealth hit record highs in 24-25. Total household wealth reports to be reaching nearly 17 trillion, with real estate making up a large portion of that wealth. Many of these gains are tied to property, to real estate. Real estate valuations make up a large share of personal wealth, which helps explain why the wealth boom is so visible, even if if pressure from cash flow is rising. So, in my opinion, this is one of the most dangerous weaknesses in the system right now. And it's called equity withdrawal. I'm sure most people have heard of it by now. It's accessing the equity in your home. This has built a huge amount of Australia's household wealth over the last 25 years. See, before the early 2000s, equity release was not mainstream at all. In the 80s and in the 90s, banks were extremely conservative when it came to borrowing. Refinancing was very rare. The idea of a redraw on your home barely existed. Lines of credit were only for business borrowers. Homeowners didn't treat property like a spending machine. Most people just got themselves a house, got a mortgage, paid the mortgage off, never touched it. Equity wasn't something that you withdrew so that you can live. It was something that you held on to and retired conservatively with. But over the last 20 to 25 years, Australians have been using their homes like automatic teller machines, but in a very socially acceptable way, of course, you'd hope. Sell and upgrade, refinance, redraw, offset withdrawals, interest-only loans, lines of credit, splitting loans to access some cash. See, it wasn't really seen as debt. It was seen as being smart. And in many ways, it was very smart because it made a lot of people extremely wealthy. And it's still doing that to this very day. Working out the exact total of equity borrowed here is actually impossible because the official mortgage equity withdrawal numbers haven't been properly updated or presented for years. The RBA has bits and pieces, but there's no simple current tally for the public to actually see. What we do know is this: for the last 25 years, Australians were withdrawing equity in aggregate, not just paying their loans down. And this is documented, even if the exact total isn't neatly published anywhere. So this equity release idea has contributed to and provided a vehicle for property investment, for upgrading your home and doing renovations, for buying and starting businesses, spending on lifestyle, holidays, cars. Middle-class Australians today live like kings compared to the wealthiest people in the 1980s. And yes, this naturally inflated the economy. Accessing redraw is borrowing, and borrowing is money printing. Money printing inflates the dollar. Money printing devalues the dollar, but it pushes up asset prices. It's not so much that the asset itself actually goes up. What it is that the dollar goes down. And by the way, the Bible warns about this. In ancient times, this kind of thing was called, in the biblical terms, it was called deceitful weights and dilution of silver. Today, it's called inflation, debt expansion, quantitative easing. It's money printing. It's the same principle, just wrapped in a different package. And this is also why you see a portion of the population appearing to do really well while others suffer. A lot of it's because of equity release, not necessarily because of a high income. So the key question today, how much equity is actually left among Australians? We don't have a clean official number for usable equity, but we do know that around 17% are on relatively high loan to value ratios, and that a lot of older owners are asset rich, but they've got no cash. That tells you that the system isn't sitting on an unlimited pool of easily accessible equity anymore. And if something breaks, if something goes wrong, then what? See, this equity ATM is beginning to slow down because a big chunk of the population can no longer pass the bank's serviceability test anymore. I don't see this situation turning into some kind of Hollywood everything crashes tomorrow way. It's more like we're running a marathon with a broken leg and we've only got 41.5 kilometres to go. And everyone's just pretending that the limp is normal. Australia's economy is still ticking along because households are absorbing the pain quietly. People aren't defaulting en masse yet. That's quite obvious because they're draining their savings. They're working more hours. They're taking on maybe second jobs. They're cutting all of their discretionary spending, tapping redraw and offset if they can or if they have in the past. They're using credit cards to plug holes. This hides stress, people, until it can't anymore. See, the government prints confidence, not actual solutions. Treasurers don't really manage money. They manage optics. They manage narrative, short-term political survival. Actual long-term fiscal responsibility, that's a myth. See, the whole system is built on one thing: debt. Debt is the economy. This is very dangerous. Household debt, government debt, property debt, super funds leveraged into assets, banks dependent on mortgage flow. See, if debt stops or shrinks very fast, everything's going to break. So they're not going to let it shrink. They'd rather inflate, tax, borrow, encourage super funds to pick up the slack where we're not doing well here, and just pretend everything's fine. But Australia has three big shock absorbers. One, we've got immigration, which brings rent demand. It brings in tax revenue. It creates GDP growth, consumption. It's GDP steroids is what it is. Then there's superannuation. The governments can lean on $4 trillion of your retirement money basically any time it wants. Jacinta, she's encouraging super funds to invest in Victorian projects because, whoops, they've blown the budget, haven't they? They need the cash. So your super is the biggest piggy bank in the country. The state is broke, okay? Please fund our infrastructure before the ratings agencies downgrade us. Property valuations, they're still holding. Now, if property prices crash, banks are going to get hit. Super's going to get hit. State revenue is going to get hit. Household wealth will crash. The stock market will get hit. Confidence will die. So the entire system is built to avoid property falling. They will destroy everything else before they allow house prices to crash, okay? Why is the stock market managing to hold up? In fact, it's doing very well. Well, because the stock market is a liquidity sponge. It's pricing the future, not the present. And the future that markets assume is low rates eventually. Earnings somehow recovering or holding up. Global money flowing. Markets are driven by capital, not groceries. What about gold and silver? Why are they pumping? Well, because the smart money is hedging against sovereign debt risk, inflation over the longer term. Obviously, there's some geopolitical instability, trust erosion in institutions. See, when metals are rising, governments say, yep, everything's fine. Well, things are not fine. Why is Bitcoin dumping at the moment? Because it's a Ponzi scheme, yeah? Well, it's not. It's because of short-term panic, leverage flush-outs, regulatory uncertainty. But the whales, the big buyers, are accumulating. A lot of capital's fleeing out of Bitcoin into what people see as safe: gold, bonds, risk-off environment. Bitcoin often dumps right before a crisis, then goes on a face melt after the crisis has actually hit. Look here, headed down through 2019, crashed when COVID hit. And then it exploded. And gold did the same thing. But the gains that gold made weren't remarkable at all. Now, is there anyone who actually understands what's going on? Well, here's the reality. I think everyone at the moment is confused. Even the economists, even the central bankers make plenty of cash. The politicians, they don't know what's going on. They don't understand. They don't understand global liquidity flows, debt saturation, currency debasement, demographic pressure. They're making decisions based entirely on modelling that actually proves that it never works. They're dreamt up in universities by people who haven't even worked a job or run a business. Incentives that don't align with reality. Political timelines. Don't forget about that one. 3-year blocks. It's all narratives. It's not numbers. So where are we really? I'd say we're in a weird, fragile equilibrium where households are stretched, governments are broke, debt is exploding, millionaires are increasing, albeit very few of them, political leadership is a complete circus, the cost of living is unsustainable, real wages have certainly not recovered, productivity is collapsing, infrastructure debt's out of control, the RBA is confused, the global system is clearly fracturing, and trust is eroding everywhere. This is not stable. It might look stable the same way that a dam feels stable right up until the day that water starts flowing over the top. And once that happens, there's no stopping what's about to come next. Now, Australia might not fall off a cliff tomorrow. I certainly don't think that it will. But we are walking on a narrow ledge with no guardrails, and the people in charge certainly don't have a map. Guys, thanks very much for watching. I really appreciate it. Don't forget to like and subscribe. Leave a comment in the box below. Make sure you share this with someone who you think will benefit. I'd like to thank all my subscribers as well. We've just hit 20,000. It's absolutely amazing. I had no idea it was going to go as well as it has. So I really appreciate my supporters, and I'll look forward to seeing you in the next video.